I'm going to do that again. All right. Thank you very much for joining this Tuesday guest captain interview series with Jonathan Gibbons of VigTech.io and myself, Samantha LaDuc, founder of LaDucTrading.com and LaDuc Capital LLC. We have a nice special for today's action, if you will, in GameStop and the rest of the other short interest plays of the past week to discuss parabolas as forced and trapped longs, among other topics. I'm very excited that you joined us. Again, this is the guest captain interview series with Jonathan and Samantha, and I thank you for joining. Jonathan, can you hear me okay?
I can. Can you hear me?
Yeah, I started it off with just, welcome, and then realized no mic was on.
We'll never get used to these Zooms, man.
I think it's more the fact that I really, I told you, I never did this kind of like interview thing, but I like to learn and I'm curious as get out. And this is just a really good way to lose my earring in front of everyone. So just to race in front of the camera at the end of the close and say, okay, I'm done doing all my client deliverables. Let's go.
Oh. Yeah. And today's like one of those days where it's like, you're like, it's total chaos with what's going on with some of this stuff. So then it's not like you're able to like, oh, I'm gonna have a glass of water and sit down and wait and like kind of wait for the market to close. That's over.
It's intense because there's a lot of fast moving stuff, and I have a live trading room where I'm trying to capture chase ideas, update on swing ideas, trend ideas like this GameStop, and then I'm actually in anticipation of our talk, which I know we're going to be talking about market structure.
Mm-hmm.
I did up a client post on kind of how this whole GameStop short squeeze turned gamma squeeze came to be with some, interesting data points. But first, I want to talk holistically with you about market structure. And
Okay.
You gave a great topic title, which is Parabolas equal trapped shorts. So one thing I know you had asked is whiteboard, so we can kind of whiteboard that out. Hopefully that is something you can find in your drop down. So
yeah, we do. We have it. It looks
Okay, great.
All right.
So just to kind of this topic first and foremost is really tradable, but it's intensely busy. So the Blackberries and the Bed Bath and Beyond and other types of plays that I had, conservative price targets for since August or October are now exceeding, right? And I'm trying to have to sky's the limit, if you will, with a GameStop, trying to find the next price target and the next price target for clients, because I got a bunch who are actively long from much lower and holding. They see the Chamaths of the world come in and say, I'm buying February 115 calls. And, hearing rumors of Kathy Ark recommending, and the Reddit stream is still hot fire flames about hurting the elites who are, short, like Andrew Left and Melvin, who got bailed out by 72-point Steve Cohen's firm and Citadel.
Yeah.
To the tune of billions of dollars in lost revenue from their GameStop short. So this is like real soap opera market drama, man. It's like the haves and the have-nots going to war on Reddit and Twitter. It is the young and the restless. I love this. So, okay, so I'm way too much in the weeds with this one.
Okay.
And this whole GameStop drama.
Right.
I would love to get pull back a little bit and talk to us about the market structure. What the hell is going on, Jonathan?
Well, it's interesting. I sent you this the other day when we were like, what are we going to discuss next week? And I had sent you that interview with none other than Ken Griffin. And what I thought was that was totally had nothing to do with GameStop. And this hadn't happened yet. This was like last Tuesday or Wednesday, I think I watched it. And so, somebody had recommended it, and I couldn't believe that he actually had done an interview. And him and Cliff Asness did an interview, and Asness has a huge fund there too. And he's a great personality too to follow, really sharp guy. And this was like a back and forth conversation about market structure and liquidity. And let me just pull up some notes real quick. But it was put on by the American Journal of Finance. And what they were talking about was they were talking about it in relation to you know, policy, like policy that the government had put into place, ramifications of the policy, data, what the data that they made the decisions based on, some of these kind of knock-on effects of the policy decisions, which we're witnessing before our eyes, which is, you know, kind of infinite money, more money today, as Jim Rogers calls it, instead of modern monetary theory, which I heard last night. I thought was great. So like a little bit of MMT, you get some of this stuff going, and like you get these, and you got Robinhood, when you have Robinhood with, you know, free trading and then free options, and you got an attraction, and you got a lot of bored people, and everybody's sitting at home. And so now all of a sudden you end up with a situation where, and this was the term that they used in the conversation, is that short selling is neutered, okay? And that the Fed policies have gone to take a big chunk out of active management. And they believe that to be, and they were very, very intellectually speaking about this, right? Like very much from market makers' perspective. And really, really, if you go listen to, and I will post this YouTube video that the American Journal of Finance, it was, you know, it was private at first, and then they post this. I suggest everybody watch it, especially in the context of this past week, because Ken Griffin comes out and says, hey, look, this is something that's a problem, because when we don't have enough short sellers in the market, right? You don't have enough offset, and you got liquidity problems. And then you get these potential situations where people get overrun. He said this 2 weeks ago.
Just 2 weeks ago, because I remember you sent me that.
Yes, he said that 2 weeks ago, or maybe it was a week and a half ago, and then this happens. And so when you look at, like, you know, you had been saying, right, for weeks and weeks and weeks, and session after session after session of these webcasts, hey, it's a rotation to these different areas that prices seem to be discounted, and then they're bid up, right? We get the gamma squeezes, and then you end up with something totally different. And so I think that this is part and parcel, kind of a bigger issue, that now we've got these market plumbing problems that they're very real. So you're sitting on GameStop as Melvin, and Melvin's one of the most successful hedge funds the last 5 years. I mean, they're not, he's a Steve Cohen spinoff. The guy's not, these aren't stupid people. And they've had a very successful track record with not just, you know, long or short, they're long and short, right? And so they've got different strategies, from algorithmic trading, all kinds of different stuff. And so this was a position, and they had taken a big short position in it. And the short gets, you know, squeezed. And you talk about the parabola goes both ways. And I'll talk about market structure in a second to kind of whiteboard out the situation. But effectively, what Griffin was saying is that, you know, you can't get an ongoing auction, right? And he used the term auction, he used the term market structure, he used the term liquidity, he used the term, you know, the hedging and so forth, everything. And you know, they have complete transparency at the Citadel.
Oh my God, the Robinhood flow at Citadel.
It runs through Citadel, right? The bulk of it runs through Citadel. These guys from Robinhood originated off of that tree. They are from that tree. I don't know if everybody knows that, but if you go look up where the two guys came from, come from that tree, okay, in that group. And they moved out to California. They create the app to be interactive, and so that they could create the dark pools. And so, you know, Citadel, he's looking at this data, and he knew that this was a potential problem to occur. I don't believe in the right or the wrong of these situations. I mean, come on, it's like, you know, the guys are saying they're, you know, we're evening it out against the hedge funds, and then the hedge funds are going, you know, this is not, you know, this is a tough situation. Where Griffin comes from, which is the market structure perspective, is this stuff really causes some problems, right? That's taken place, because what is the plumbing, and is this fixable? So if you look at what probably happened, and Kim Carson had put something about this last night, and I'd said to you people privately yesterday, is that more than likely Citadel was sitting on the opposite side of that trade. Yeah, they were on the side with more than likely Melvin, right? They probably
Yep.
were exposed on the short side, and they were not going to get paid. And then they had made money on the long side because they were high frequency trading, front running the trades that were in the actual dark pool, right? Because Robinhood trades, and we talked about this kind of briefly, but if you go to, like, let's say $5.07 on bid and $5.21 on ask, and that's in Robinhood, and then you go to go to E-Trade, and E-Trade's using BZX, or they're using EdgeX, or they're using ICE or something like that, and you see 507, 508, right? And so the ask spreads from Robinhood are just terrible, and that means what's happening is that trade is getting sent, that order flow is getting sold over to, right, Citadel. It's getting sold to Sigma. It's getting sold to a bunch of these different guys. And they then use that and they front run it, right? And so now we've got people who do dark pool tracking and stuff like that, right? And that's a new thing. But this is what's really going on underneath the surface. So he's staring at this information, which we've got all these participants in the market now from Robinhood, and they're buying all these calls, and they figured out, you can squeeze on this side, whatever. And he sits there, and he's very, very intelligent, right? And there's some things he said in there I'm going to leave out that you can listen to, and you're going to be like, whoa, did he just say what I think he said? And like in relation to how much the market can move and all this kind of stuff. And it'll be kind of like discreet to some of the tweets I put in the last 2 days, is that I think that once you start causing problems, like it's just like anything else in life. Like if you're getting away with something for a little bit, no noise, no harm, no foul. You start braggarting about it. You start getting bold about it. You start coming out about it. Now we got a systemic little problem that this needs to be dealt with. So when you listen to the conversation, he's saying that when we've killed the short sellers, which is what I'm going to show in the parabola structures, right? I'm going to show some charts and then show the way that the auction jumps and all that kind of stuff. And you can't ever short anything for more than 5 to 10 minutes nowadays, which is totally insane. That goes back to the one time frame flows. That goes back to the passive flows. And they discuss this in this conversation. And Asness is the one that really goes after with very much a bold perspective. It's, look, if you don't have active management, the market is broken. And that really, the passive flows, the one-time frame flows that come in, plus the fact that you can't short anything, you get GameStop, right? And you get Beyond Meat earlier today, and then Cell and the rest of them. I got a whole Momo list, right? They all look the same. They're all parabolas. And, the options has grown so much larger. We're kind of seeing the culmination of everything that we've been talking about for the last 4 or 5 months right now. And so now it's at the forefront, the front desk of, Citadel to Sigma, 0.72, everybody else. And, is this something that's just going to solve itself, right? Or, is this something that's going to be a little bit more rocky going the other way? Well, on the buy side, it's fine because you can infinitely go up, right? Like theoretically, you can continue to go up.
Yeah, let's hope they don't discover VXX.
Well, that is something that's significant, right? The short vol trade is the Fed's trade.
Oh my God. Can you imagine 40 million millennials want to break the back of the Fed? That's how to do it.
So it's the short vol trade.
That's what I mean. To buy VXX long, we have this kind of race to the downside. It would be a breaking.
It would be a systemic risk. I said to somebody, earlier today, I said, I know that when yesterday and they, so he said, so I can just imagine being a fly on the wall in these conversations, Citadel is sitting there or whatever. And they go, look, we've got this short exposure, as do some other market makers. Maybe they're the only short exposure holding the bag on the GameStop thing. They made money on both sides, but they're like, well, I've got this guy, he can't pay me back. Right?
Yeah, they're not the only ones, because even though they said in this press release, and I had retweeted that yesterday near the close, it was a $2.6 billion short.
They had 2, and then 0.72 came in with 750K. But and the go ahead.
No, I was going to say, you finished, because I just had also read S3, which does a really good job on short interest. Said that 6 billion mark to market was lost on Monday alone.
Yes, totally. And so you think about the leverage and the on top and the total full exposure, right? The full exposure was we're at the point they were going under. So they sit there and they're like, well, the guy goes under, you can't pay me back. So I'm gonna in those short, yeah, I'm never gonna get covered. Here, I'll just float you. You're gonna give me half your fund. I mean, it's that simple. You're back in the game now. Go get back after it. Then the second phone call is we got a problem. This is systemic risk because if this gets into other areas, these single stocks don't matter, right? Like, and I say that and they don't matter. When you start getting this into these indexes that involve the passive flows and all of the pension funds and the short vol trade, that's a systemic problem that they're not going to be able to handle right that way. They're going to have to handle it a different way.
So I can't help but bring this up because there are two things, and I know nothing about the data behind it. I would love to see the data behind it. And I have read both of Nope, It's Lily's
yes.
GameStop post, which, by the way, made Bloomberg Opinion.
Oh, good for her.
As
Yeah.
a reference. In other words, Matt Levine does Bloomberg Opinion. He's written twice on GameStop this week, and he cites her article. So I don't know if she
Okay,
knows
I'll
that.
let her know. Yeah, I don't
Let her
even.
know.
Yeah, I'm sure she knows, but I don't know. I'll find out.
No, maybe not, but I had read it too because obviously I'm all things GameStop right now. But I like Ken Griffin's comment as far as the auction, because I've always referred to this as an auction of buyers and sellers. Some use the value weighted whatever. I don't personally. I know you do, but I see it as an auction of buyers and sellers, and I think of it very much when my mom took me to the auction. It was in a
Yes.
barn in
Yep.
upstate New York.
Yes.
And
Yes. I was going there. I'm going to go there with the conversations. This is great. Go ahead.
this is exactly how I see it, right? And then yesterday when this is just eerie, and I don't have any facts to back this up, but I'm going to show you something, okay? In my write up to clients, okay, and they know this because we've been trading this puppy. And on Friday I said 91.80, even though it closed at 65. Okay, let's just go back a little bit. I'm getting to a point. So GameStop closed at 65.01 on Friday, and in the morning I had seen that the highest strike was $60 calls. So that was it. There couldn't be like a gamma explosion, that was going to settle much above that in my mind, because that's like, as Lily said, 100% delta, right?
Right.
So I said, okay, so if it closes above this, I had given a particular level, then here's my next price target, which is 91.80. And on Monday, it obviously went through 91.80 to 147, which happened to be the next fib extension. So believe it or not, I literally had, no, I'm getting to a point here, but let me just show you here. Where is this? Close, share, screen. All right, so this was what I had sent to clients on Sunday night, okay? So basically, this is where, since we did pretty well, let's see what we can do here. 91.80, this would be the extreme, because Friday already, closing at $65, was already a 15 standard deviation move. So I don't even know what this is on Monday, but a freak of nature. But the reason I bring it up was because that morning when we opened, okay, sorry, you can see, hold on, yeah. When we opened, we were, hold on just one quick second. I'm getting there, Jimmy. Yeah, look at this, it's 180, it's freaking out after hours.
It's
Okay.
all balancing, trying to deal with
It's a mess. So basically, if I was to go on a 15-minute, I have to show you this because it's eerie. But I'm in the room, right, in my live trading room, and it's 10:30, 10:45, right? You can see this 11 o'clock, 15-minute basically is when it reversed and it dropped. And it had 4 halts between its, whatever, 159 and where, it literally went in half, right?
right.
And I saw it coming in, the volatility in VIX, in how do I put this? How do I show you this? Between 10:45 and 11:15, GameStop fell from 159 to 88.09 with 4 trading halts, okay, along the way. And I had written this to clients. This was Monday, not today, as in Tuesday. My bet, the factor rotation out of highly shorted hedge fund names is blowing up some big and small hedge funds. This was before hearing about Melvin. This was at the end of the day on Monday. They're forced to buy in. We've got, ridiculous leverage. Okay, so here's, I don't even know how to tell you how to trail your stops on this one. Like a Maya Koopa. Good luck. It's basically what I told clients at 10:37 when this sucker was past my 147 price target, my outside price target. And I went, liquidity matters. And right now I see the names running the most, right? Like the GameStop and some others, sucking in the liquidity of names that matter the most. I'm sorry, running the most, sucking in the liquidity of names that matter the most. Please be careful. So I had just posted a VIX chart and it was incredibly, what do you call it? Like, you know how GameStop right this minute is doing this after hours, freaking out? So at that moment in the morning, when I posted that note at 10:37, I saw VIX like trembling. Like I'm like, and I remember in my room, I had this kind of mama's voice. This doesn't look good. This doesn't feel good. And you can go back to my recording and I'm a little bit passionate. Like I don't get very often. I'm kind of monotone in my room. I'm very in the zone, just analyzing. But I swear I saw that VIX just starting to tremor, kind of like what's happening right here with price action. And I'm like, take care. This doesn't look good. Something's wrong.
Right,
and it collapsed in half. That GameStop, I'm talking about GameStop in particular. Now, since it, has continued and obviously blown through, every known price target. But the point is, when you do your market structure, it kind of, parabolas or trap longs, this is what it felt like. It felt like liquidity was coming out of the names that really mattered into this kind of crap, forgive me. And that's just not a safe place to be, in my humble opinion. So,
100% correct, right? So effectively what happens is you've got smaller and smaller lots, because it only takes, like, if you think about an auction, right? Like you're at the auction there in upstate New York and you're bidding whatever, right? And let's just say it's this ornate, like, Fabergé egg, right? And you're at the auction and it says,
it was a farmer's table, but that's okay.
Yeah, I'm just throwing stuff out.
If you'd come across a Fabergé egg, we wouldn't have known it was Fabergé.
Farmer's table. We'll talk about this farmer's table. So $100 bid, right? That goes up, you got 105, 100, 106, 107, 108. Then the bid jumps. So somebody says 120, right? And the market dynamic to this is that then volume comes in, a bunch of bids come in at 120. So 121, 122, 122, right? The dude does his little thing and it takes it all the way up. But you got a big gap in there. You have a huge gap in the bid, right? That's prices technically, because this thing in the farm table ends up going for 145. In the market, the way the market works is that never actually gets closed out. It's just always for sale. Right. And so that's the different dynamic between the market and an auction.
It remembers.
Right. The market is an auction, but it's an ongoing and endless auction. And the amount of buyers and sellers at each one of those levels is very, very, very important. And so real, true, heavy back and forth action determine price, which is what's really discussed in the conversation with Griffin and Asneth. Is that is the essence of liquidity, right? Where you're able to get into the market and get out of the market whenever you want. And that's good for everybody, right? An IPO comes to market. That's the purpose of coming to market, is to create liquidity for the people that created the company and for allow to everyone to participate in the company, as it was be different than when being private. And so everybody's able to play in this sandbox, and you're able to get in and out of the positions, right? That whenever you want, and you've got an abundance of liquidity. So liquidity is a very important thing, a very good thing. When Powell's like, oh, the markets aren't functioning properly, and he says that, right? He said that numerous times. He's referring to there was no liquidity, right? The buyers were not able to deal with the selling, and the sellers were overwhelming the buyers.
In that case, I think it was the banks hoarding, and they didn't want to lend because they didn't know that. Yes, but
well, the banks don't lend, right?
Yes.
Well, he really gets at liquidity, because it's all about pensions and it's all about that entire infrastructure, 401ks, everything else.
It's bigger than that. When we had that repo in September of 2018, the interest rates, the overnight went from 2 to 10%. Freak of nature, like a GameStop. Never happened. And you would think Bank of America would want to get a higher rate of return. So they didn't lend because they were afraid of getting it back.
Yeah, you're not, that's total collateral risk. Like if I will lend to you at any cost, right? At any premium, I will not lend to you, then I'm 100% concerned you're insolvent, right?
Yep.
And that was the beginnings of it. Then it ends up in the market some months later, and you get to the thing where there's no bid. So like if you put this on,
That's the bidless market we're all worried about, right?
well, what you saw when you were in the middle of this, when was the ES, right? It went down 1.67%, something to that effect, 1.6. I looked at it like peak to trough yesterday about 10:30, 25 minutes. It was gone, right?
Yeah.
And that was exactly at the moment that you're describing right there.
Yeah. And I wrote that at 10:37 going, what the?
what happens is effectively that if you imagine like all the volume, it goes up smaller lots, smaller lots, smaller lots, smaller lots, and you just got this constant bid up, which is what we call GORP. I've said it 150.
Yes, Gorpy. Yep.
Gorpy action that is not back and forth. So effectively, we know that the statistics say that there's 80 to 95%, somewhere in there, of the gains are all overnight. That then
yes.
The one time frame. So in the overnight futures are bid up, right? Mm-hmm. The land in the open of 9:30, the one time frame purchases and the ETFs and the passive flows, bid those right up, right? And then you gap ramp in camp. And we see that, and that creates this broken market structure. And what Asnez we're talking about, Griffin, we're talking about 100%. That was the whole point of the conversation, is like, this not healthy, because what happens is you have no price discovery, right? So if you have people step in to the market at different levels, so you don't have that intervention, right? With HYG, you don't have the intervention to create these false floors, right? That then gap these overnight levels, right? Which is Euro, this is all Euro trading most of the time. It's not Asia, it's mostly Euro, right? And when that keeps laddering up, right, which it has since the end of 17, so like 17, all of 17, then 18, then all of 18, then end of 18, then all of 19, and then 20. We keep getting bigger and bigger and bigger, is because of these pension targets, right? We talked about this historically. Yes. All this different stuff. All this stuff's coming home to roost. What happens is you end up with these moments where the selling, right, overwhelms all the previous buying, right, instantaneously. And it's a different impact than it's similar to the GameStop on the upside, right? But the upside's unlimited. The downside is finite, right? And so the situation gets distinctly different and is much quicker and much more violent. And so all those buyers, so it's trapped, I call it, trapped buyers. Parabolas equal trapped buyers. And what you saw was an example of that. For a few minutes, VIX spiked. I think VXX was up 10%. UVXY was up 15% in 25 minutes, right? VIX started the day very high.
Yeah.
Right? VIX was already up when it woke up that morning. And then you get the whole situation that liquidated one and a half.
But I would love to see, honestly, the market structure of VIX, right? The Gorpy action SPY, with the 4 GME trading halts. Because between 10:45 and 11:15, that sucker dropped 63%.
When
boom.
Well, there's something that's said in the video that I'm not stealing the thunder in relation to I can do something with the market anytime I want.
Oh.
Okay, and so
ants and elephants.
You think about that in the context of what was said, because you got to understand the sell side order. So if I'm holding, let's say 10, I buy 10 shares, 20 shares, 15 shares, 4 shares, 3 shares, 2 shares, 1 share. The price kept going up. Then somebody shows up and sells 1,000 shares. They sell 1,000 shares. That wipes out everybody underneath it. There's not enough people to step in. They just continue the selling, right? And so ultimately that's a dangerous situation, right? And then I've said many times that the one time frame buying and selling of the ETFs, right? And we've talked about that at length. Those are indiscriminate. So there's not an active manager sitting there going, well, maybe we should, maybe we shouldn't. Nope, they sell. It's a mandate. They're selling, right?
That's why the ARC ETFs became such a rage, because they are actively buying and selling every day. They even list their purchases and sales. So that's the
Yes.
close, and then they have the second most asset under, management to
Yeah,
Vanguard.
it's all coming in because everybody kind of can see and sense that this is not a situation that's stable, right? And so,
Yeah.
you just ask yourself, do I want this? And this is a byproduct of the passive environment, right? That really started around the 1500 level and SPY, and it started before that, but it's carried it ever since then. The
Yeah.
action, which kills the auction, creates no back and forth. So this isn't about the GameStops. The GameStops of the world are the end result of this entire sequence of events, which at this point in time, we're kind of at the
I don't know if it's the end though. I mean, we're all on shaky ground here and we know it. And yet you can see the rotation. I'm a sector rotation gal, right? So
Mhm.
I'm looking for money flowing from sector to sector. So we already saw the giant run up. Sorry, my cat's butt.
There you go.
In,
The third guest. Yeah.
in EV plays.
Third host. Yeah.
Right? At pot stocks, they have, they did the bottom fishing. Okay, now they're coming up because of the Biden win and blue wave. We saw the EV for the same reason, that Biden bid and the blue wave. We have seen the SPAC attack. I mean, 400 million, 400
look at
new
all the
issues.
penny stocks. The penny stock.
Now it's the penny stock rotation. And
Yep,
now
yep,
it's the short interest. No, we have been on the short interest bandwagon since August, September, in my room. That whole value factor rotation has been my number one theme last year going into this year. We've talked about this.
Yeah, totally.
But now everybody's like, let's just find some shorts and squeeze them.
Well, typically, once you've, that's why I say, like, it's becoming too public. That this is just anecdotal in my opinion. This is totally an opinion. Okay, like that people can take it with a grain of salt. Typically, you can continue to do the same thing as a rising tide is good for everybody, as long as things are going up. And it's just, okay, keep going. I don't care. I'm making money. You're making money. Nobody's losing, right? Except for maybe a few people here or there. At this point in time, now it's a us and them deal, right? And they're starting to pick sides with all this stuff, and they're really pointing out some things that I think they're waking up a sleeping bear to the systemic risk that is in place with the situation. Like GameStop blowing up funds, right, is not going to be something that's just passed over as like, okay, this is what do you call it?
Oh my God, it's approaching 200. I mean, the people who are, and I remember telling clients when, I said 50, if we slow down and, start to chop around 50 for GameStop, that would be normal and healthy because that's a monthly trend line, et cetera, et cetera. And when we sliced through it to the upside like butter, and I had said before, if we go through that like butter, shorts are going to be in a world of pain because there's 139% short interest. I don't know mathematically what number that equates to in a price target, but I could see what happened with IV, which was already getting elevated around, like the 200, right, with IV, which is already a biotech event, kind of level. Well, and then now it's 1200 IV.
Yeah, you were dealing with stuff. I saw a quote before we got on. It was like you were paying 20% of the stock price for an option. Like, so you like a little bit out of the money.
Intrinsic value is really
it's totally blown away. So now we're not even talking about a stock. We're talking about two people at an auction in a pissing contest.
Oh my God, the billionaires are pissing on each other. The Chamath with his, I'm going to buy the February 115s.
That's piling it on to the feeding the crowd, right? Like, it's us against them, right? And again,
but they love that. That is the whole angle, isn't it?
Yeah, it's the angle, right? But it comes with consequences of its own. Like everything sitting here is now becoming which side of the table I'm betting on. And that's what these types of things now become. The Winklevoss twins came out and said, we're buying GameStop today too. It's to prove a point, and this, I say, I listened to the Jim Rogers podcast with Grant Williams last night, and he had some really interesting things to say about Bitcoin as it relates to the fact that, these
value.
guys, and they're very smart guys, Bitcoin, the crypto crowd for sure. It's just, they need to just make sure they understand that throughout the course of human history, the governments, when they're ready, they just outlaw it, right? And they just go, no, it's treason. And you can't hand it over, try and use it. We're going to just hunt you down, put you in jail. And it's a really good point to think about as this becomes an us or them situation, that everybody's escalating it to that place, you're taking on really the government, right? And you're taking on the infrastructures of the government. And you got to make sure you're really thinking through the position in the way you want to position. And I think people need to think through this as it relates to, like, I'm going to hold this to infinity and we're going to blow it completely out. You got to be smart, because at some point, once it becomes too systemically a problem, right, then you get intervention. And when you get intervention, that's not going to go in the direction of the constituents. That's going to go in the direction of the infrastructure. And so
but that's still a distant threat that could happen anytime. But so is market structure collapse. But we can't trade like that. I mean,
no,
if I
I'm saying,
look at
I'm saying what I'm saying. Yeah, what I'm
it
saying
looks
is
bullish. I
you
mean, there's
have to
nothing.
take into effect, you got wipeout risk, right? You do have wipeout risk the further that this goes, and the more adversarial that this gets, and the more us or them that this gets, you got wipeout risk. And that wipeout risk is this you can't really mathematically write it down or come up with a formulation for it, because it's a zero, right? So you wake up and it's we turned it off. And so, like, I think on the flip side of this situation is, how many circuit breakers do you hit on the downside when you this kind of action to the upside, right? It's not going to be unequal to the downside, right? And so you just pointed it out. It was up, what, 180, 145, 150, and then yesterday, and then by the time that because see, that deal was done in the morning, they reset the shorts on it and they broke it in half. They halted it 4 times and it got down to $88, right? Everybody realized that there was something going on. It halted 4 times. So that's what I mean, like equal and opposite reaction. It's not a one-way street here. And that's what I think everybody's got to realize from a market structure perspective is, yes, on the upside, it's an infinite situation. On the downside, it's finite. You get wiped out. And so the hardest thing to do, right, is to get up from the craps table or the poker table or the blackjack table when you're hot. Right? It's the hardest thing.
But there's also, that's gambling and speculation. There is a difference.
GameStop isn't speculation.
No, but it's also mathematical.
Asset.
Right now, this particular trade, if you will, of burning the Citrons and the Melvins and I don't know who else. And I have to say, you only live once. The Reddit folks that are coming in, the YOLO trade, right? Which are just balls to the wall going long as anti-establishment or something. It's just hysterical to me, the perspective that they're taking on Wall Street by taking on this collective, they think anyway, that they're incredibly powerful. And by the way, they do make up 20%. So they actually do have some numbers behind them. But I can't help but get to this comparison with Volmageddon. Do you remember after the February 6th? No, sorry, February 6th or 7th. When was it that VIX XIV disintegrated? I think it was you know what I'm talking about.
Yeah, it was the
after
6th.
hours. Was it 6?
2018. Between 4 and 4:15, they couldn't rebalance it based on the fact of the one time frame terminology of that exchange traded note. They were not able to rebalance it, and it terminated. It went from 90 something to $5.
February 5th. That's okay.
15 minutes.
So what the heck? I'm just fascinated. Here's GameStop after hours, just tagged 240. I mean, I can't even come up with, I had 148. I thought I was really brilliant.
These are like I said, this isn't a price of anything. This is just simply an arbitrage situation that is totally blown up. And so they've got to figure out from the market making perspective, who owns what, who owes who, where are these things, how many contracts are out, what's the notional value of the underlying, of all the options? Because what's happened is they've bought all the short-term options, the amount of the total amount of short-term. And this is the unintended consequences of the creation of Robinhood, right? And this stems back to Robinhood, where we create something, we have unintended consequences. It's fine until everybody uses it for something different. We talked about mortgage-backed securities, right? And how it was fine, in theory, until it got really kind of squirrely and out of hand. Well, this is where it's fine in theory, but now it's squirrely and out of hand. And you don't even know whom owes who, the mathematics behind all this at this point is probably very, very staggering. And they're trying to wrap their hands around it pretty quickly. They're struggling with it, obviously, to figure out what the real price of this thing is related to all the options that have been sold. This is a mess. And this moves to other, this is not a problem with these single names. It's fine.
You're not worried.
This is a problem with index ETFs like XIV that are ETNs that have insurance to terminate, and they'll let them terminate. And and these single names, it's not the same situation, but those other things they'll terminate them if they get in the same type of inverted situation. Now, everything goes up, nobody cares. Like I said, if things going up, it doesn't matter. Things go down, flip it, right? So now, you said, you were the one who brought up the other day, and you said it again earlier, is if this flips and people start buying puts, right, it has a different impact on the market, right?
I wasn't not just talking about the puts though. For me, it's more that they start selling other stuff. They're forced to sell other stuff that really matters. That was my comment that I made to clients that I was just talking about. So liquidity, as I'm looking at this go up to the sky, this is what I said, because I think it matters, because there's a price target in here for those who are really looking at where I see risk triggering technically, because we're talking, systemic, what if, and the mechanics of what would cause it. But I'm talking about certain levels in VIX that would make me not only recommend selling longs, but also a level to get under the desk. Liquidity matters. And right now I see the names running the most, like the GameStop and all the short interest stuff that we have seen hot fire flames, running the most in liquidity names that matter. I got to read the whole thing. Liquidity matters. And right now I see the names running the most, sucking in the liquidity of names that matter the most. Please be careful and watch my VIX chart. Right now it is a flash crash warning potential if VIX triggers 27, then 31. I go on to talk about that. But the point is that 27 is okay. It is time to really take care. And above 31, it's more than a short for a trade. So if it gets and stays above those levels, I'm very concerned because of the speed at which it can move, given the speed at the rate of change that we're seeing in some of these. You don't agree that single stock gamma, like GameStop, aren't going to flow over into the index?
I fully believe like that. Once you learn basically cheesing, right? Like we talked about, like where you learn the move on the game, right?
Oh yeah.
Use it on something else, right? And so that is a now systemic risk. Like if it's moved over into the things that affect 401ks and pensions and all that other stuff, this is a single name. This is like we're all arguing over a bankrupt shopping center video game outlet that we're all arguing over what the price of that is, and it's a pissing contest. This doesn't matter. You move that over into the things that are attached to boomer retirement programs, right? This is all like kind of fun and sport. That stuff is serious risk. And then you've got the rehypothecation of all the ETFs in that situation on top of the single names, right? And so then you've got the whole systemic, breakdown that can take place. And we don't need to go into all that. But I think ultimately with this not going to correct yet, VIX continually holding and coiling where it's sitting, you're seeing these single stocks just run really crazy, which are causing serious problems in liquidity at the levels that they are. And these are serious problems. I mean, a $3 billion problem is not chump change. It's not, it's not like, we just printed, 12 trillion or something like that. So let's put it into context, right? Of this is going to blow the whole market. It's not going to blow the market up at all. This is an issue that if it migrates becomes a serious issue. But on top of that, it's kind of showing you I would call it we've talked about how options have overtaken the stock market.
Oh yes, the tail.
The size of it is eating up the securities underlying situation. Now you're seeing it manifest itself in real time that this is totally out of control. GameStop from $4 to 220. And I forget who had the best post ever the other day. They're like totally like worth $30. And they showed, it was like everything must go in a shopping center picture, like a GameStop. Like they were just liquidating. GameStop is like literally liquidating. They're totally defunct. Like it's like we're used to go buy video games that you can totally play on your.
No, you missed the whole
Yep.
bull case of the Chewy CEO coming in and saying you can be an online provider. In any case, but look at margin.
Yeah.
Margin real quick.
Yeah.
Because Peter just mentioned as a hedge against long stocks, long vol, short vol for the next month or 2 or 6. I had someone actually say that they have vol in March that with the crazy IV is still going up, even though volatility has been going down. Their 3 months forward is actually holding its own really well. In any case,
I agree with that.
Margin levels are very high, and I can see Hedgeopia, which does a great job. Yet another record in margin debt in November and December combined up 18%. In that time period, SPY was up, almost 15%. From last March, margin debt has increased 62.3%, massive increase in leverage, obviously. And that's always been kind of a precursor to, or, a warning of things to come. But so far, they just keep hammering away at this short duration, single call gamma options. I'm seeing hundreds of thousands of contracts come in for GE, hundreds of thousands of contracts come in for Fubo and Planetar, and Tesla boring now. It's already
Oh, well, it's rotating and just creating steeper and steeper parabolas that don't have any market structure to them at all. They're just one-way tickets, like constantly one-way tickets. And this is, if you think about back and forth of the auction of the entire market, you'd prefer it to come, correct and see buyers step in volume, creates a price floor, sets a real level where things are, going to be able to continue to perpetuate on going forward. And that sets a real floor. We got a floor at 1,500. We got a floor at 2,200. And we've got a floor now at what, 3,300 maybe. But that floor is kind of going to get shaky if it's tested with some serious heat. And so, there's no, it's tough. This makes it worse, in my opinion, from a market structure perspective, because this just continues to escalate the gravity with which these names are taking, and not every name is like a Fubo or stuff like that. This is still affecting some of the names that are held in like apps, right? APPS, all these names. Some of these are like IWM. Like IWM's run, I'm convinced, has been a proxy of the underlying single stocks drag, right? So it's a rotation, but IWM contains a lot of these names in this Momo list that we've created internally. And that has drug up. All these things have drug up these indexes. So the indexes are not basically unexposed to what has been drug up in these single stock names, right? And they are totally exposed to this stuff. And these names, as they get further and further, as they run out of gas, then there's the market structure underneath them. Like zoom out on that particular one.
Which one? IWM?
You can look at apps. Like look at apps for a second.
I got weekly, daily, and hourly time frame. This is
So go to weekly. You see that like $6 to $61.
Oh yeah, I know.
And that's in 6-7 months, right? So you look at FCell and you look at a bunch. There's so many of these.
There's so many of these.
But a lot of these, not all of them, but a lot of these are in IWM. A lot of these are, this single stock thing drifted over into the SPY underlying. It drifted into the Q underlying, right? Securities. So this has absolutely impacted this stuff. So if these single stock names begin to have to discover a price when they didn't discover any price, right? That's a significant risk to the situation. VIX has held, because I think it's sniffing. Is if nothing happens, it could keep going, right? There's no doubt about this stuff could keep going. But the Robinhood situation that's created the options overcompensation or overtaking, whatever you want to call it, for the securities itself, dragged this stuff up, right? They all look the same. Every one of these looks exactly the same. And it's 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 fun and games until it hits the indexes. That's
Well,
what I would say. It's just fun and
that's
games.
what everyone's, here to find out. When does it happen? In the meantime, there seems to be safety in numbers, and they are piling on to the poor, GameStop shorts, which really are. And this is one of those things where I can't even show you now because it's so condensed. But
What's the saying? Like once you could become you succumb to your own success. Once you neuter all the short sellers and you wipe them out, there's no one to sell, right? And you just basically the situation where the market eats itself. And so there is a whole auction kind of criteria based theory about that, where once you run out of buyers, and Mike Green is the one that's got a great
yes,
break.
I put that in chat. Yep.
Yeah, he's got a great breakdown on what happens once there's nobody to you've eaten all the short sellers, you killed all the active out of the market, then what?
But
Right?
but when you say out of, well, they're definitely not out of the market right now. They're chasing this stuff and they're not letting go. And the
Well,
point
nobody
is,
wants to step in and sell, right? So you don't have any reason to step in and sell. That doesn't mean they're not there. Bears hibernate, right? In real life, bears hibernate right now. Why are you going to step in front of a Mack truck, right? But once this steps in, once it happens, then that market structure is going to be taken over, and it's going to have to figure out. You look at these market structures; they're very, very, what do I call it? Sketch on all these names. Like, it can keep going. Like to your point, to everything you've been saying for several weeks now, is like, yeah, you keep going, and there's no doubt it can keep going. It just is that there's some point where you have to be aware that the risk is what it was yesterday when you saw that 1.5% in 20 minutes, and it was a straight down move. There was no bid. When I say no bid, that's every 5 minute, 3 minute, 1 minute bar was bidless. It just was sinking, right?
so this is actually,
That is what you have to be aware of, that it won't be something you're going to get out of. Oh, I'm gonna see it and then I'm gonna step back. It's just going to light you up.
yeah. I'm not sure this will have any relevance anytime soon, but I am seeing this. By the way, it's not my chart. It's a Suburban Drone, but I liked it because it's EM currencies versus the dollar. Um, we have definitely had some basing. Oh, did I not show you that? That would be,
Yeah, no, we didn't see it. Can't see it.
yeah. I got the screen share on here now. There. So we talked about the dollar, having a surprise move higher that could be resetting, and some different reasons for that. But EM currencies versus the dollars, there's definitely some levels here that I'm checking out of interest. I just can't. I'm just fascinated. Hold on. And then the other was most recently have this whole concept of a bidless market, if you will. Where are the foreign holders at some point? I'm thinking will focus from hedging currency risk to selling underlying assets, especially if this nonsense keeps going on. I mean, it's just like hedge funds are getting taken out in body bags that have been in the factor rotation trade, right? Which I have talked about in this growth to value. Let me just real quick, this growth to value theme. Hold on. Help. There are a few things. This is one chart, definitely. Growth to value rotation picks up, inflation expectations moving down, like this kind of thing, right? This is also another one of those alligator moves that have to converge. We're talking about this kind of growth to value. And right now, the short selling, and this was done last week in these names, the short selling basket is up 30%.
Yeah, no, I guess I would say that I think that there's a couple different market dynamics at play that are all kind of converging at the same time, and they're all on the same storylines we've been talking about. The dollar is basing, right, in a big broad way, 8 weeks now, something like that. And that's gotta shake the tree. You're seeing VIX base for almost 8 to 10 weeks, and VIX is basing while this is going on. and to the point of your rotational stuff. So, this seems to be bigger, even bigger than anything we've
So
seen.
this is going to blow up hedge funds. My point in trying to show this is performance of stocks with a high short interest, right, is an outperformer this year since the lows. But even Goldman reported that their basket of most heavily shorted stocks have a month-to-date return. That was yesterday, of 30%, the most since 2008. So the hedge funds that were long momentum and short, quote unquote, value or anti-momentum or cyclical, whatever. And now this highly shorted ones like GME and BlackBerry and Bed Bath and Beyond, the retail chart, have you seen this crazy, thing? It's not normal. That's the kind of thing that I think is going to blow out some hedge funds that need to liquidate the other holdings that have been keeping stuff up, like semis, and big tech. But they're holding out until earnings, it seems. It doesn't seem like there's any tremor yet. But this is.
I just like, I mean, I kind of, I don't know how many hedge funds are getting blown out by like, this is like, GameStop was kind of in the dirt, like shorting it at $4 is like, you get $4 to pick up on the,
I think they shorted it from higher levels.
Yeah, well,
Yeah.
let's say you did. Let's say you shorted all of the cruise. You could carry the same concept over the cruise lines. Typically, long short funds are they have a few long short things going on. I'm not sure it's as big a deal systemically to the hedge funds as you might think. I think a lot of them are probably a little bit more balanced than not. Like, because the long short guys are the long short guys, but like there's a lot of mix of vol stuff, CTA type, trend tracking. There's a lot of different type of things that are going on. So I think,
well, something's causing a liquidity crunch here, because this was also another one that I grabbed that
yeah, I saw that too.
Yeah, so that to me is showing some danger here. I like this, market new high with declining liquidity.
Well, when you listen to Griffin talk about it and Asnes, they were 100% concerned about liquidity, and it's I think it's even bigger, right? Like I would say that the single stock stuff is just the culmination of the tech impact and then the options impact kind of coming to a head, so to speak, right? And it can keep rotating to other things. And then you step back and you look at what's happened with VIX and it's based, and you look at what happened with the dollar and it's based, and you look at the indexes themselves are kind of making new highs, but like IWM's been kind of chopping around for a week or two. You're starting to see advanced declines come down a little bit where they're not leading, they're starting to roll over.
I think Craig in chat nails it. The question will be whether or not the Fed feels the need at all here to step in and force banks to raise margin requirements in some way.
Oh, that totally agree with that point.
100%, 150%. That's
you've
it.
got you got Jerome tomorrow, and you got the FANG earnings next week too. So like over the next week. So I think that like the Fed policy, the EU policy came back and it was kind of hawkish. The last conversation, and that wasn't risk on, that was risk off. And if the Fed has any, and I said and I said it kind of passingly, but not really. Like if the Fed does change the tune in any way, right, then it does change the card deck.
Yeah.
Completely. So, I don't know what that, interest rates going up. I don't think so. No, but, forward guidance, language, commentary, one of those things Jerome says that he has to take back later. I don't know, but it's all that. The Fed is out tomorrow, and that's a big Fed meeting in the context of everything that's going on behind the scenes. And I do think that when they do see systemic risk like this, now this is systemic risk. What we're seeing is systemic risk. Like you've said, like we pointed out this whole call, if it migrates to other stuff. And if it migrates to other stuff because of the unbridled nature of it and the fact that it's so new and so big, right?
It becomes a Volmageddon type event, one by one by one. I don't know.
or much more like across the board, right? Like where, you know.
No, I'm talking with GameStop. Will something happen tomorrow?
Oh,
Because they have
yeah.
to rebalance at night. Everyone's wiped out. There's just a bidless market.
Yeah, and you know,
GameStop.
and I don't think that.
I don't know. I have no idea. I do
Yeah,
my fibs.
yeah, no, I'm totally agree that, like, when you start to get into this type of environment, imagine a gap down under $60 from $240.
that.
Trapped buyers, they're all trapped. It's over.
That is the topic. I tell you, that was
That's
a
it.
perfect topic. Parabolas are
And trapped
trapped
buyers.
longs, and most people think of it as trapped shorts.
Yeah, no,
I
it's
thought that was
trapped
brilliant.
long.
The way your phraseology there was spot on. So again, if the Fed comes in and says, yeah, 139 short interest for GameStop, we can't let that continue because they're going to do it, you know, arrow for each individual play. This is going to happen over and over and over again. Maybe they do say something tomorrow. I don't know, but this is something that probably should be done. And I don't know. And tell me something philosophically. This is just, you know, a religion, if you will, opinion. But do you think it's okay for Chama, who's a multi-billionaire, to come in and others, you know, of position to move markets for sure, you know, with all his SPACs, and he's celebrity CEO and he's going on TV. He can talk his book just like everybody else can talk their book. I'm not going to make a difference, but he can. And then he comes out and says, yeah, I'm long. And then another big, you know, name comes out and says, yeah, I'm jumping on this thing. When they know fundamentally there's absolutely no basis for that kind of valuation.
Can you broke up a little bit there. It's kind of breaking up a little bit.
Oh, it's 4. I guess it's 5 o'clock, and they're like, "You're done now."
No, I'll answer that question though, because it's a really good question.